Very warm welcome to this fireside chat. I'm a bit nervous, sir. Always you are some kind of very different kind of tie. What's the brand that you prefer?
I think it goes with season. So.
Okay. You know, somebody told me.
And a central bank has to be for all seasons, so it's okay.
Somebody told me that if you want to if you make him feel at ease, you start talking about ties. That's him. In fact, here Mr. Dave sitting, HSBC India CEO, was trying to excite me, ask him all sorts of difficult questions and all. You don't know how good communicator he is. And just last Sunday was the World Cup, and just for a moment you think that we are not at the Geo Global Center, we are at Lusail Stadium, Qatar. If that is the case, just think about that. Then I am facing Messi. Messi on the central banking turf. I mean, I don't know how do.
Was Messi? Don't mind it, but was Messi also a postgraduate in history?
Yes, sir. So, Shailesh mentioned...
Because I am not often, but I am sometimes reminded by people that, I am supposed to have done history. So.
Yeah, but your work and policy work speak for you, not your...
But in a more serious note, let's get going, yeah.
Okay, Shailesh spoke about, this cryptocurrency. I remember in November last year, we had a fireside chat with you. That was in your room in Reserve Bank of India, 18th floor. It was telecast and webcast and all. And there, very strongly, you waged a war, if I may say so, against cryptocurrency. 13 months back. So you have won the battle, you think? Because finance ministry has all along been, till recently, ambivalent. So the cryptocurrency war is over? You think you are a winner?
No, there is no war or anything like that. You see, we firmly believed and do firmly believe even now that cryptocurrencies have absolutely no underlying, and we have been sort of, I think a lot of noise is coming from. So, cryptocurrencies have certain huge inherent risks for our macroeconomic and financial stability. And we have been pointing it out. And the developments over the last 1 year, including the latest episode of the built around this FTX, I think after all this, I don't think we need to say anything more about our stand. I think the time has proved that cryptocurrencies are worth what they are today. And according to some estimates, the total value of cryptocurrencies was about 188 billion or 190 billion, 180 billion, but now the valuation, has come down to about dollars, has come down to about 140 billion dollars or so. About 40 billion value has got really wiped out. But change in value in any so-called product is a function of the market. But unlike any other asset or unlike any other product, our main concern about crypto is that it doesn't have any underlying whatsoever.
Sure.
I think the term cryptocurrency, private cryptocurrency, is a fashionable way of describing what is otherwise 100% speculative activity. And there is a talk that, it should be regulated. Now, how it is to be regulated, somebody needs to explain. But I would like to just mention 3 points. One, the origin, the cryptocurrencies, the private cryptocurrencies owe their origin to bypass the system, to break the system. They don't believe in the central bank currency. They don't believe in the regulated financial world. They want to bypass and beat the system. The second thing is that they have absolutely no underlying. And not only that, I am yet to hear any credible argument about what public good or what public purpose it serves. There is still no clarity about it. And third, as I have said, it's 100% speculative activity, and I would still hold the view that it should be prohibited. I mean, countries have been taking different views, but our view is that it should be prohibited, because if it is allowed to grow, that if you try to regulate it and allow it to grow, please mark my words, the next financial crisis will come from private cryptocurrencies.
Okay. You are reiterating what you said. So, sir, we have a series of, I have a series of questions. I don't want to get into only GDP and inflation. So, little different thing, you launch CBDC, pilot projects launch. But can you just very briefly explain to us, I mean, how do we, what's the use of CBDC? Because you said it's currency, it's like currency notes, it's anonymous, and that's it. But what is there? I'm happy using UPI and all. Why do I shift to CBDC? It's just an optic to fight crypto, or there is something meaningful for me, people here, to use CBDC for the retail?
No, I'll explain why. I think in the monetary policy press conference, in the post-monetary policy statement press conference, I did explain about the difference between UPI and...
anonymous, you said.
Sorry?
This is anonymous,
between,
like cash.
Between UPI and CBDC. The first thing is UPI is a payment system. CBDC is a currency itself. That is number one. Number two, as I explained, UPI involves the intermediation of banks. You use through the mobile, you pay somebody, then my money gets debited from, the message goes to the bank, my account gets debited, the bank transfers the money to the bank of the, to your bank account. Your bank account sends a message to you that, so much money has been received. So there is an intermediation of bank. CBDC is like currency notes. You go to the bank, you draw it, you keep it in your purse and you spend it. And what is more about CBDC is that there is an automatic sweep in and sweep out facility. 24 hours you can draw CBDC, and if you are carrying excess CBDC, you can put it back into your bank account. So there is an automatic sweep in and sweep out facility. The second or third, whatever point that may be, the third is that the huge logistics, the cost of printing around printed notes, that is not there. Manufacturing paper, getting the ink, having a printing press, all that thing will become outdated over a period of time. Logistics wise, CBDC will be much simpler, and it will be much faster. Next point is for international transactions. When two countries have their own CBDCs, it can be instant, remittance, instant money transfer between one country to another country. The whole world is going towards, is becoming more and more digital. Almost in every sphere today, you have digital activity happening. You will see in the coming decades, now many central banks are still in, experimental stage, they're still analyzing. Some central banks have started pilot projects. But you will see in days to come, more and more central banks will embrace digital currencies. And India has been in the forefront of the digital revolution in the current, in the current century. So therefore, we have to be in the forefront. It's not a question of fear of missing out, or it's not a question of offering competition to a private cryptocurrency. I think that is how the world is going to evolve. That is how the digital world is going to take shape in the days and years to come, and we have to be ready for that.
So it's a currency of the future.
It's a currency of the future.
Sir, you said that you are a student of history, but let me take the liberty of asking you about economics, which you know better than many economists. So how decoupled is India from the rest of the world? Because that's also be the subject of our discussion with the economist, the last show of the thing. And in that context, if you can just very briefly, because I have many more questions to ask, I mean, how long US Federal Reserve will continue to be the big daddy? I mean, we want it or not, our eyes in on the FOMC meeting, your MPC, one or two members can dissent, but the collectively Reserve Bank of India and MPC is always, you use that Arjuna's eye, so that it's FOMC, what is FOMC doing, is it slowing down, etc. So is it, I mean, there is no escape from that?
No, you see, being the largest economy in the world, naturally what the US Fed does, it matters. It matters to everyone. and a large part of global trade is also dollar denominated. So therefore, what US Fed does is definitely important for everyone. But so far as our monetary policy making is concerned, so far as our other decisions are concerned, we are largely guided by our domestic inflation growth dynamics and several other international factors. Actions of US Fed are considered, are studied, but that's only one of the factors. It's not as if something the Fed does and we will have to sort of follow that line. And so therefore, we are primarily, and I have said it earlier also, our monetary policies are governed and driven primarily by our domestic growth inflation dynamics. Actions of US Fed do impact our domestic situation because, like if, there's a tightening, let's say the dollar becomes stronger, naturally the price of our imported, we are a commodity importing country, naturally the price of our imports, the crude, petroleum crude and other imports will go up. But we are not, nobody is anybody's big daddy in the current world, everybody has his own space. Okay. And I think the days of Big Daddy and all that thing is 19th century. It's no more the case, but yes, US is a major player. But let me say that primarily we are governed by our domestic, and when I say it, I really mean it.
Okay. Sir, you brought in the two words which I thought would avoid, inflation and growth. So tell me, 10 months in a row, Reserve Bank of India failed to contain inflation within the band, which is nothing new about, everybody knows, and it has, as we speak, it has gone within the band, etc. But historically, very often RBI's estimate of inflation is off the mark. Actual inflation is higher than RBI's estimate. So one could be we need to take a look at the composition of inflation, or other could be Reserve Bank of India needs to take a look at its assessment of inflation. Where are we?
No, we constantly keep on fine-tuning our models of inflation forecasting. But any forecast, whether it is of inflation or it is of growth, by any central bank, not just the Reserve Bank, is always conditional to so many factors. Now, if the conditions change, if the underlying conditions change or do not happen the way you had assumed, then naturally the numbers will be different. But the last few prints, I think our expectations both on inflation and growth, we are almost getting it to the second decimal, or the first decimal if not the second. Okay. So 6.3 was our estimate for the growth of the second quarter, and we got 6.3. The last inflation print, which came at 5.88, let's say 5.9, our expectation was about 20 or 30 basis points, I think, higher than that for the month of November. So sudden developments do take place. We keep on fine-tuning our model. What is important to see in the context of inflation forecasting is not whether you are getting that number right. It is essentially whether you are getting the direction of inflation right. And not only the direction, but also the force of the direction. Whether we are able to read correctly that the inflation is going to go up, is going to go up very fast or is going to go up very steadily. So it is the direction and the speed of the inflation movement while it is going down or while it is going up, or if there is volatility. So I think it is the direction and speed underlying the inflation, inflation momentum, which is important, not just getting that number right. Because monetary policy is based on the direction of inflation, the broad speed of inflation, rise or inflation decline. We don't go by that, the inflation will be 6.34 or 6.48, something like that.
So talking about growth, Governor, you seem to be pretty conservative. In fact, your latest assessment of growth, you paired it bit. World Bank's assessment is higher than that. Why this sudden conservatism? Typically, you seem to be less bullish.
The World Bank, the latest projection, they are talking of 6.9% for the current year, we have given 6.8%.
Yeah.
Primarily it is because of the global headwinds. Europe and other countries, large number of countries are facing, a series, facing a very serious growth slowdown. 6 months ago, the talk of, or 5 months ago, the talk of a global recession was much more intense. Now the expectations built around recession have slightly moderated, but the fear of recession in many parts of the world, or the fear of, or the fact of slowing growth is quite visible in large parts of the world. And they will definitely affect the external demand. And external demand do contribute a lot to our growth calculation and to our, let's say, to our export performance, etc. So it is primarily the international factors, the slowdown in growth all around, the tightening of financial conditions world over. All these factors, external factors, will have an impact on the domestic growth scenario. But the underlying economic activity in India continues to be strong. In fact, the last month's fast-moving indicators, we monitor about 70 fast-moving indicators, and most of them are in the green box. We have this marking of green, we have this marking of red, orange, yellow, green. Most of the boxes in those fast-moving indicators are in the green zone. That means they are all picking up, they're still growing. But external factors are important, and they will definitely cause some, dent on our economy. So we have considered those aspects, and therefore we have adopted this 6.8%.
Yeah, latest November bulletin, which was released yesterday, also spoke about what exactly you are saying. So let's get into from macro to micro, which all these gentlemen sitting here, representing a large part of Indian banking, both foreign, private and public sector banks, they would love to hear your views. This kind of credit growth, what we are seeing year on year, is it sustainable? Do you think that this gentleman actually showing seeds of troubles ahead? Again, we'll get into a bad loan, or you think that no, Indian financial system now knows, the bankers knows risk management, underwriting, everything? Because anecdotally we hear in private bankers are saying, no, risk pricing is not exactly correct, probably we are going overboard and all. Are you concerned about this, or is it everything is fine?
You see two aspects. Number one, the credit growth, 17.5%, that is the latest number as of December 2nd, which we have, I think, published, 17.5% credit growth. That reflects the underlying fundamentals of our economy. The credit growth in the previous 2 years were very, very modest. In the first year of COVID, the credit growth was just about 6% or so. The second year, it was slightly better. So on a low base, and that is the second point, the current 17.5% is on a low base of previous 2 years. There is a base effect which is also playing its role here. So it's on a low base, and second point, it is reflective of the underlying fundamentals of the economy, and it is also a reflection of the pent-up demand of the pent-up demand for credit of the last 2 years. So considering all these factors, I think the credit growth at the current point is certainly far, far away from what you call exuberance or something like that. It is definitely very, very steady. We are monitoring it very, very carefully. And while on this point, let me also mention, because this question comes up again and again in any public discourse, that deposits are not growing and credit is growing. So are we heading for an unsustainable situation? I do agree that deposits have to grow. They must grow to sustain credit growth in the long term, in the medium or in the long term. But certain facts also will have to be kept in mind. Just as the credit growth looks very high because of the low base of the previous year, the deposit growth also looks pretty low because of the base effect of the previous years. Because in the COVID period, the deposits were growing by about 10 or 11%. So this deposit growth that we see today, the latest is, I think, 9.9%. that is on a slightly higher base. And looking at the absolute amount, in fact, the December 2nd figures, that is the latest, I was looking at the numbers. From end November 2021 till 2nd December 2022, that is over a period of last 1 year, the credit growth in absolute numbers is rupees 19 lakh crores. The deposit growth is 17.4 lakh crores. Let's say 17.5 lakh crores. So it is not as if there is a big gap between the deposit growth and the credit growth. The base effect of both is making it look that much more divergent. So at the current moment, therefore, I would like to say that the credit growth is reflective of the underlying economic fundamentals and growth of the economy. Sorry for that longish answer.
It's so much homework you do. In fact, you have taken away my second question about deposit growth. Do you think that the banking system is pretty unfair to the saving community? Because you yourself spoke about negative interest rate. And for credit, for the loan rates, you have an external benchmark. For deposits, it's free. So what needs to be done if you want to attract savers to the bankers' fold?
I think all the leading bankers are here. Most of the banks have already started raising the deposit rates, and going forward, they will definitely take a commercial call. They do need deposits. The banks also have a considerable amount of surplus SLR holdings, which they have the option to dip in anytime they wish to. And just to give out some number, because we do monitor it in the Reserve Bank on a weekly basis, the weighted average lending rate, I'll just give one example and not bore you with too many numbers. The weighted average lending rate on fresh loans, the lending rates have gone up by about 117 basis points, 117 basis points. You see, I remember 117 because in my student days, there was a DTC bus which had the number 117. So last time when I read the number, that is how I remember 117, otherwise it's very difficult to remember. So, because I visualized that particular DTC bus. So, the lending rates on new rupee loans have gone up by 117 basis points. The fresh deposits, both retail and bulk deposits, the weighted lending, the deposit rates have gone up by 150 basis points, 150. So therefore, deposit rates are picking up going forward. It's a function of the market. Both lending rates and the deposit rates are a function of the market and the Reserve Bank's, policy rate. So I think deposit rates are picking up, and they should, they may even go up a little bit more or further.
Thanks, Governor. You spoke about this 117 bus, because I was wondering that Mr. Dayal sitting here, Chief Communications Officer, CGM, Reserve Bank of India, he probably kept an invisible teleprompter for you, the way you are reeling out numbers. Dayal sahab, no? Okay, you have done that. So let's come to,
I'll share, I'll share my own experience.
Yeah.
The best thing to remember certain numbers is to relate something to your own personal experience. So that is the best way to remember even, like 117.
Governor, this is a little critical question. No, HSBC boss has not taught me this. Reserve Bank of India has two roles. One is the developmental role, meaning about the financial system, stability, etc. Other is supervision and all. But of late, in private bankers says that you are becoming a bit of a micromanager. Like you are running the banking system, not the bankers themselves. Nobody will tell you, nobody will stand up and say, but the little, said RBI, बहुत कुछ भी करता है उसको बोलो. Anything we need to do, you have to tell them. Every question, minute question, they call it quote unquote micromanagement. Is there any validity what they are saying?
I don't know. This is the first time I am hearing that. I do interact with the, the MDs and CEOs of the banks. I have not got that sense. And apart from the official engagement, I do know a lot of people who work in the banking sector. at various levels. And I know personally several people, and I do get a lot of feedback from them about various banks. You know, you have your friends, relatives, or their children working in various banks, so you get a lot of feedback from them. I have not heard anything, but perhaps what you are referring to is the intense and deep supervision that we are doing. Over the last 3 or 4 years, we have really deepened our supervision. Ultimately, at the end of the day, you see, in United States, failure of banks happens, you know, it's nothing unusual. There are cases of bank failures, it happens, everybody takes it. In India, failure of a bank is just not acceptable by the public or by anyone. And everybody looks at the RBI. So it is our responsibility as the regulator and as the supervisor of the banking system to ensure that the banking system is stable, the banking system is robust, and it is ready to cater to the emerging requirements of the Indian economy, which has aspirations of becoming a $5 trillion economy in the next few years and aspiring to be, an advanced economy by 2047. So our focus is to ensure that the banks are stable, they are robust, and keeping that in mind, we have really I must say very clearly, we have really intensified and we have deepened our supervision methods, our supervision approach, and it's a very constructive and friendly dialogue. In fact, wherever we have difficulties and we are worried, we do have a meeting with the chief executive CEO of the public sector or the private sector bank and share with them our concerns. We are now looking at business models of banks. For example, if we find that the unsecured retail portfolio, the loans, the unsecured loans, retail loans are rising very fast and they occupy a larger space in the entire portfolio, the lending portfolio of the banks. We immediately flag our concern to the bank. But we don't interfere. All that we tell them is that please place it before your risk management committee. Has your risk management committee considered it? Has your board considered it? We leave it to the board. So therefore, our effort is to ensure that the banking system is robust, it is stable. It is nobody's intention to do micromanagement and micromanagement or macro management of banks. We don't interfere in that at all, but we keep on raising wherever we feel some signs of worry or discomfort. Yeah. We do raise those points with the bank, and it's an ongoing exercise. Supervision of RBI is no more a year-end exercise, it is an ongoing round-the-year exercise.
Thank you, sir. So all of you heard that. It's a friendly consultation.
No, don't instigate the bankers against the RBI. I think you seem to be doing that.
Okay, sir, talking about another sensitive issue, IBC. IBC started in the record time, 2016 August.
But on a more serious note, let me say that we follow a very consultative approach with the banks. And right from the beginning, on the day of my joining in the Reserve Bank 4 years ago, I had said that we will follow a consultative approach, and the first consultative meeting I held after taking over as RBI governor, which I announced on the day of my joining, was to hold a consultation meeting with the chief executives of both public and private sector banks. So we follow a consultative approach, whether it is banks or other players in the financial sector, and it's a very constructive relationship that we have. And sorry, please.
No, absolutely, sir. Now I'm talking about IBC. 2016 record time IBC came in the picture. First lot were SR and others, quite a few. They are pretty good recovery, then started slowing down. And now the new norm is NBFCs are also coming under IBC. And at least there's 2 cases, I will not name the cases. They are the kind of offer they are getting is much less than the liquidation value. So something needs to be done, you think, when you bring IBC for NBFCs also. But it's a complete disaster. It seems like prima facie going by the numbers. Something needs to be done.
You see, first thing is that, we should not look at IBC as a mechanism for loan recovery. That is the first thing. It's a new law. It was enacted in 2016. It's already 6 years, but still it's a new law. the way, the legal jurisprudence around the new law develops. Now the lot of Supreme Court judgments have come, and the jurisprudence around the IBC is now fairly well settled. The main challenge for IBC has been the time that is being taken, the delay, the initial idea that, certain things will happen in 15 days, certain things will happen in 90 days or 6 months. That has not happened, and there are multiple reasons for that. So there is first the factor of delay. The second factor is, I said it's not a recovery mechanism, but nonetheless, how much money you are realizing, how much recovery you are doing is very important. That cannot be wished away just like that. It is an important thing. So when I say it's not a recovery instrument, it should be seen in the proper context. Recovery is important, I am not denying that. But if you compare with what was getting recovered in the earlier regime of, when the BIFR framework was there, or the other frameworks which have been in place over the last so many years, compared to that, the recoveries under IBC are still, in terms of numbers, are far better. What is important is to make a timely reference under IBC to the a timely reference, a timely invoking of the IBC. I think that is very important. Traditionally, the approach has been that you wait for an asset to deteriorate up to a point when nothing is left out of it, and then you put it before IBC. I think what is important now is to identify the early stress in a particular portfolio and refer it in a timely manner, in time, to the IBC, so that not only the recoveries of the credit are better, but also the company revives far better. So a timely reference to IBC, a timely invoking of the IBC provision is also equally important, and I think there it is improving. Under section 227 of the IBC, we were given powers to do it, to apply it for NBFCs. And as soon as we got the powers, I think sometime in July 2020, July 2020, along with that, we were also given the, regulatory powers with regard to housing finance companies. And we referred the first case within 2-3 months. Thereafter, there were 2 cases, which we have now referred, which are now before the IBC. And let us see the outcome. Let's wait for the outcome. I think it's in very advanced stage. Both the cases are in very advanced stage. So let's wait for the outcome.
I have 2 more questions, sir. 5-6 minutes, whatever it is. 2024 budget is just months away, and immediately after that, Reserve Bank of India will have its MPC meeting, and this is the last budget before elections. So typically, let's accept it that the approach to the entire economy gets a different kind of shift in the run-up to the elections. People would love to, the administration would love to talk more about growth than inflation. So you think that your job will be more difficult now because of in the run-up to the elections? You spoke about, yes, deposits also growing, and the banks have enough excess SLR which they can liquidate to support the government borrowing program. Because if you go by the media reports, it looks like that, 5.5-6% fiscal deficit you are talking about. We had a historic high government borrowing program this year, which you have pulled through almost, but the yield on, I'm using little technical term, till now we have not used any technical term, yield has gone up because there is a credit demand. Earlier, past 2 years, you could manage the yield because there is no credit demand and enough liquidity. Now liquidity is on balance, is plus minus depending on how the government is spending. So you don't have the advantage of that, no credit demand is there. So it will be not as easy as you have managed till now the government borrowing program. You need to probably allow the yield to go up, etc. This is the sort of macro background. If you give us a sense as a governor, do you think that it will be now more difficult now to have your say that no, interest rates need to go up? It's till now you continue to say that inflation is enemy number 1, And even your latest yesterday, which happened November bulletin, also spoke about inflation, etc., etc. So this growth inflation dynamics, will it change going forward because election is knocking at the door 1 year down the line?
You see, what will change, I mean, I cannot say. It will depend. I mean, February monetary policy is still 1.5 months away. So many things will happen. And in any case, what we have in mind will be determined as we move closer to the, to the MPC date. So many things can happen in between. We will take a decision at that stage. And in any case, it's not possible for me to comment what we will do in the next MPC. But one thing I can tell, and I would like to make it very clear, that the fact of elections coming up in 2024 is not a factor at all so far as monetary policy making is concerned. Monetary policy making is for checking, controlling inflation. Government also is equally serious about controlling inflation. In fact, I must say that to check inflation, there has been a very, coordinated approach between the central bank and the central government, in the sense that we have done our bit. We have taken number of measures with regard to the rates, with regard to stands, with regard to liquidity. Government has also undertaken several supply side measures like cutting down the taxes on petrol and diesel, reducing import duties on several other imported food items. So everyone is interested in bringing down the inflation, and I am sure government also would be equally keen that the inflation is brought down. But that apart, the point is for monetary policy, what matters, you use the term Arjuna's eye. The Arjuna only looks at inflation and growth. Arjuna is not looking at, that there is an inflation or, there is a election coming up. In other words, what I am trying to say is that the fact that there is an election, because in India elections happen almost every year. There will be a combination of states also undergoing elections. So election is not a consideration so far as monetary policy making is concerned, and monetary policy will do whatever is in the best interest of the economy.
Thank you, sir, for your patience. My last question, I think everybody would like to know that India's presidency at G20. So how do you see this? What are the opportunities you see?
No, I think it's a great opportunity for India it gives India a much bigger role in the international arena. In the world stage, India has now a much bigger role. India will be chairing all the G20 meetings, it's already started. And it's a place to, also for India to play a bigger role. And I think the biggest task for the world community, not just for India, the biggest task for the world community and for G20. After all, G20 represents something like 85% of the world GDP. Now, and about 75% of the world trade. So therefore, the G20 as a group does matter a lot for the rest of the world. So what is very critical and important for the G20 as a group is to restore the trust and efficacy of multilateralism. I think over the last few years, multilateralism appears to be losing its efficacy, whether in the context of fighting COVID or in the context of dealing with various other global problems. And I think something which the G20 as a group needs to address collectively, and as a, I think the whole, the underlying theme of India's presidency, that is, Vasudhaiva Kutumbakam, that is, one earth, one family, and one future. So it is one future which is important. So I think for G20 as a group, the most important thing is to restore the efficacy and trust built around multilateralism. And I think India today, whether you look at it from the point of view of the way the world is growing, or you look at it from the point of view of the current geopolitics that is happening today in the world, I think India is uniquely placed to play that role effectively.
Thank you, sir. Any message for this audience comprising bankers, NBFC, insurance, mutual fund, as a microcosm of entire Indian financial system is present here and outside. They are watching you. Apart from YouTube and other channels, there is this big screen and the other room also being live. They are seeing. Any your last one sentence message for them?
No, not one sentence, but maybe
Yes.
3-4 sentences.
Please.
No, one thing I would like to say is that the last 3 years, 2020, 21, and the year which is now coming to its end, last 3 years, the world has seen in succession multiple shocks of extreme severity. 3 black swan events, one after the other. I have talked about it earlier. The Indian economy and the Indian financial sector today remains resilient and much better placed. And for that, I think the credit goes not just to the regulators, the credit goes to all the participants and the players in the financial sector. Together, all of us have done it. And as we enter 2023, let us not think that the problems are over. There could be new challenges. There could be new, battles which we have to work. And I think we should all remain optimistic. And together, as we have done in the last 3 years, together, I am quite sure that we will work together, notwithstanding your comment on some bank CEOs having differences, feeling the heat. But notwithstanding all that, I am quite confident that we will be the financial sector players and the regulators, not just RBI, but the other regulators. We will be work together to maintain. We will be working together, and I'm confident we will work together to maintain and strengthen the inherent resilience and the capacity of the Indian economy. Thank you.
Thank you, sir. So is confidence, optimism, and caution. These are 3. I don't want to summarize and take longer time. Like every good thing, this also has come to an end. And thank you for being so candid and not taking any offense of seemingly critical questions, observation. But I was just what I overheard in the corridors of bankers, etc. That's I took the liberty of asking you in presence of everybody. Thank you, sir. So Mr. Das has completed his 4 years. Last week he started his 5th, and as and when he completes his 6 years, presuming that he is not getting another extension, presuming at this point of time, in Reserve Bank of India's 87-year history, you will be the 2nd governor to have 6 years. So give him a big hand. Thank you, sir. Thank you.